The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, breaking news. Ethereum's London hard fork has activated upgrading the network to stabilize ETH transaction fees and burn new coins according to network usage, among other improvements. And joining us now is Christine Kim, CoinDesk research analyst and editor of the Valid Points newsletter, breaking down Ethereum 2.0 and its sweeping impact on crypto markets. Welcome, Christine.
Thank you, Christine.
So, I love it. Two Christines in the house. All right, break this down for us. Tell us what a hard fork is and why it's so significant for our viewers who are not so familiar with the technical terms in crypto.
Definitely. So a hard fork refers to a backwards incompatible upgrade that happens on a decentralized network like a blockchain. And one of the reasons why it's so significant is because of how difficult it is to pull off in a decentralized network. For a backwards incompatible upgrade, all users who are connecting to the network needs to upgrade their software at the exact same time in order for the upgrade to be pulled off smoothly. So today we saw roughly 80% of computers, also called nodes, connected to the Ethereum blockchain, ready to upgrade their software. And because of that, the Ethereum network didn't experience a chain split, a sudden event in which users are running one version of Ethereum software and another part of the users are running a different version of the software, and then you've got two networks. Because enough users, miners, exchanges, other infrastructure service providers all were able to prepare and anticipate this upgrade in advance, we did see a successful execution of a backwards incompatible hard fork on Ethereum.
Christine, a little bit what we can expect to see over the short term and the long term, because I think that's, there's all this anticipation always for these kinds of events, but then sometimes people are disappointed when stuff doesn't happen right away. Will we see any significant changes, just either in price or gas fees or anything like over the next few weeks, or is this a longer term phenomenon?
Both. So one of the things we were looking out for in the short term was definitely whether or not there was going to be a chain split. Now we're tracking how much ETH is actually being burned. And the last I checked right before I came on here, over 110 ETH has been burned on the network, which equates to roughly 280,000 USD. It'll be interesting to see how that impacts the total supply of ETH moving forward. Other things we should continue to watch out for is the existence of technical bugs, unforeseen issues with the code. Some of those take months to be discovered. Other things that we should also look for is the gas price. How costly is it to use the Ethereum network? Now it's going to be a lot more predictable to know what the gas price will be during the next block of Ethereum. And the last I checked before this show, gas fees, which is another term for transaction fees on Ethereum, is roughly the same level as it was before the upgrade. So that's a good sign, but it could go up or it could go down moving forward. And one other interesting note that I'm just going to say is the existence of empty blocks. I've been seeing some conversation around more blocks on Ethereum being mined without any transactions in them. So figuring out the cause of that, whether or not that's a temporary phenomenon, is something to keep an eye out for.
Christine, what does the hard fork mean for DeFi? Of course, when you talk about Ethereum, DeFi is part of the conversation. So what does it mean for tokens that were built on Ethereum?
I think for DeFi, this is a very, very important upgrade, and because it creates better usability for Ethereum. One of the difficulties with using Ethereum for decentralized applications, especially ones that require high-frequency trading, was trying to bid on what the fee would be, what would be the optimal transaction fee to have your trade confirmed in the next block. Now with EIP 1559, which is one of the 5 code changes included in London, there is, again, more predictability with that, but also the Ethereum fee market is more efficient. And so I think it'll have a positive impact on decentralized exchanges, decentralized lending markets on Ethereum.
Christine, also last week you reported that there were some bugs on the testnet, and you alluded to this earlier, specifically with Geth, which is the most popular software used to connect to Ethereum. Perhaps you could weigh in on these risks.
Right. It's a risk that comes with executing a hard fork that every single user needs to upgrade to, and if there's no client diversity in that there's only one version of Ethereum that most people are running, the risk of a bug is a lot higher. You had mentioned, Christine, that this is the most popular Ethereum software client, but because of the event that happened on the test network, there's been a greater push and a greater understanding that more users need to diversify the kinds of software that they're running for the Ethereum network, so that if there is a bug that's discovered in any one of the 3, 4, or 5 Ethereum clients that are available to users, it won't have a big impact on decentralized applications. It won't have a big impact on the network. So the biggest thing I would say is client diversity and promoting that among users, creating awareness about that for how important it is for the health of a blockchain, health of a decentralized network.
So, Christine, it seems that Ethereum is going to be moving towards closer towards proof of stake versus proof of work, what it is currently now. What will this mean? This upgrade mean for that movement ultimately, and what will happen to the proof of work model in general?
So funny enough, Tim Biko, the chair of the All Core Developers Biweekly meeting, had tweeted that one of the biggest things he's looking forward to now that the EIP 155, the London hard fork is over, is that now developers will be able to focus completely on getting the merge, the transition to proof of stake completed. So within London hard fork, there's not too many upgrades that are specific to preparing for the proof of stake transition. However, many developers were focused on just getting this done, this big change to Ethereum's fee market done, and now they will have the bandwidth to really focus on pulling off the merge, the upcoming upgrade, which is scheduled for roughly next January, hopefully, with their full efforts and their full force.
Christine, do we know what this hard fork will do to price? And you mentioned burning some of the coins. Is that meant to stabilize Ethereum's Ether's price?
In the short term, before the merge is activated, I don't see a big impact on ETH supply or ETH price, primarily because currently Ethereum continues to issue new coins through block subsidies, through a fixed amount of ETH per block. That's 2 ETH per block. And the amount of fees being burned, I don't think will offset that completely. However, in the proof of stake system, and once Ethereum does the merge, the issuance of new ETH per block will reduce dramatically. It'll go down quite a lot. And that's when I think we'll start to see the full force of this burn effect on the price of ETH as it impacts and potentially reduces the total supply of ETH over time.
Right, great.
There were people who were compensated, of course, for having getting rid of bad contracts, and many developers came up with a way to gamify this. How is that removed in this hard fork, and what other kind of potential pitfalls are people warning about?
Right. So one of the difficulties with creating something that you think will improve the network and codifying rules on the network is that there's ways to get around it. So one of the code changes, let me see, one of the 5 code changes gets around something called gas tokens, and that there was an incentive for people to delete their contracts, incentive for people to reduce the amount of data being processed on the blockchain. But people started to create tokens off of that and purposefully start bloating the Ethereum blockchain so that they could get the kind of incentive and reward for reducing Ethereum blockchain state size. So one of the 5 code changes kind of took away that incentive, reduced that incentive so that people weren't trying to game that area of the Ethereum blockchain. I would imagine that one of the things we should continue to watch out for is ways in which people are going to try and game the Ethereum fee market, how people are going to leverage the minimum base fee, priority fees, how people are going to try and optimize to extract the most value that they can. With miners now not able to rely as much on transaction fees for their total rewards, it might push some miners to be more aggressive in the way that they extract value through front-running trades on decentralized exchanges through potentially reorganizing transactions within blocks, perhaps reorganizing blocks themselves. These are all risks that we'll have to watch out for in the months to come.